Next, let's take a look at exchange flows and price action correlation. So exchange flow metrics can often act as an indicator for investor or trader sentiment. So increases in the amount of Bitcoin flowing into exchange wallets indicate that holders may be preparing to sell, as coins typically have to be on an exchange to be sold for fiat, meaning that they have to be on exchange to be sold for dollars or euros or whatever your issued currency is that you're using. Now, increases in the amount of Bitcoin leaving exchanges to unknown wallets may indicate buyers are moving their coins for their long-term holdings. They're moving that capital, they're moving those digital assets off the exchange wallets to their own private wallets, where it's not as easy to sell. We can look towards the exchange flow balance in this situation, which shows the net increase or decrease of tokens moving in and out of exchange wallets over time. Positive values indicate more tokens entering exchanges than leaving. There's more inflows. And negative values indicate more tokens leaving exchanges rather than entering. There's an increase in outflows. Tokens are leaving the exchanges. They're flowing outwards towards private wallets. Now, tracking these metrics may offer insight regarding what large holders, crypto whales, are planning. Large amounts of Bitcoin flowing to exchanges indicates that there may be a large whale sell-off or a possible price dump, while the inverse, large amounts of Bitcoin leaving the exchanges, could indicate that whales are accumulating for longer-term holds. There's less coins on the exchange. So here's an example. This is provided from Santiment. Here we see in green the price of Bitcoin. This is from February 2021 into February 2022. And we also see the exchange flow balance of Bitcoin. What's interesting here is we can consider these particular sections, this particular area, this main section, as general common volume or common volume of volatility, where we see these extreme spikes to be out of the norm. They are not common. So there's a particular reason why there's these spikes. And remember, these spikes to the downside indicate negative values. We see our y-axis here. That means that coins are leaving. And at the same time coins are leaving these extreme spikes to the downside, we are seeing increases in price as a result. Particularly observed here in March 5th, 2021, late March as well, into April and into May. Now, the reverse holds true as well. We see these extreme spikes to the upsides. This is an indication of coins being sent to the exchanges, and typically when coins are being sent to an exchange, that's to facilitate the sell-off of cryptocurrency or of Bitcoin, whatever that asset is. You wouldn't hold it on exchange unless you were interested in selling it. Otherwise, you would hold it on a private wallet. And we do see these particular spikes contributing and correlating with the downward price movement observed here. Now, there were some instances we do see of coins where the exchange flow rate would go negative throughout this summer downtrend of June, July 2021. And we could interpret that as the beginning of this bottoming out pattern. Generally, we have seen spikes in price observed here and here as well. Price did try to reclaim this $40,000 level, ultimately would be rejected as this decrease, this negative exchange flow balance rate would quickly come back up to a more positive status. Here we see generally price is still continuing to fall, and up until about here where we do see generally a bottoming out in the price and a reversal to the upside. Here's where we're starting to see more of these extreme exchange flow rates. This is a very extreme wick to the downside from the exchange flow rate in early August. And generally, we do see this trend continuing to the upside, mind you. This is an indication that the cycle, this uptrend, while the prices are continuing to go up, less coins are being taken off of the exchange over time. This could be a sign of a possible top, right? We do get to this new all-time high of about 69,000 per Bitcoin. What's interesting here is that this was not met with some extreme exchange flow rate negative balance. This was actually met with a fairly neutral balance, right? This particular period was fairly neutral, but we do see this ascending value, lower lows of the values continually erring to the positive, or at least to the neutral side of zero. We do see specific spikes in exchange flow balance as price was coming down, indicating that there's a shift in market structure and overall market sentiment. Now people are starting to send their coins to their exchange to participate in the sell-off, which would then contribute to the more current downward prices. We do see similar events with Ethereum. Once again, though, Ethereum, while it is quite the commanding coin and holds a significant portion of its market share and market capitalization, if Bitcoin is trending downwards, Ethereum will follow. If Ethereum loses specific or very important market structure levels, such as like 42K or 33K, if it were to fall below that, Ethereum is going to suffer as a result as well. Particularly here, we do see this particular spike in Ethereum to the downside. This actually indicates that people were taking their Ethereum off of exchanges. At the same time, we do see a bit of a correlation with price overall generally meeting this peak, reaching this peak of about 4,800 per Ethereum. So there is a correlation. It's not exactly the cleanest, and I think part of that is mainly because of what was happening with Bitcoin at this particular moment in November and December 2021. The next on-chain metric we'll take a look at is stablecoin transfers and Bitcoin to Ethereum price correlations. So the dramatic increase in the use of lending protocols, leverage, and other loan-based transactions has fueled the use of stablecoins in the cryptocurrency space. We can track the flow of stablecoins into exchanges from private wallets as an indication of users taking loans on their holdings to purchase or trade more crypto. Now, increases of stablecoin flows leaving exchange wallets and going to private wallets could indicate that users are selling their holdings into stablecoins or taking their earnings from their trades that they use to leverage. They're taking those holdings, those earnings, into stablecoins, and they're sending it to their private wallets to pay off certain loans or possibly to avoid capital losses. And this is something that we do see often. Stablecoin flows in and out of exchanges very frequently on a daily basis. Here's what this would look like. So here we see, once again, the price of Bitcoin in green and the exchange flow balance of USDT. So this is Tether. Tether is the most used cryptocurrency stablecoin in existence for this particular moment. And at this particular moment, it is the largest stablecoin in terms of market cap as well. So we'll be using this as our example. So while stablecoins remain fairly neutral, fairly stable in terms of the exchange flow rate, We do see some particular outliers in terms of spikes to the upside, where we see an extreme positive rate or extreme negative rates. Let's see what happened on April 4th, 2021. So we see this noticeable spike to the downside, indicating that there's a negative exchange flow rate, indicating that tokens, Tether, USDT, is leaving exchange accounts and is flowing towards private accounts or private wallets. At the same time, correlating with that, we just reached a somewhat of a peak of about 58, a high established, a lower high at that compared to the high established in early March, but it was a higher high compared to the previous highs established in mid and late March. So this is a bit of a recovery. We are seeing stablecoins leave, and at the same time, prices trending upwards. Afterwards, as the stablecoin rate were to return back to this zero line, return back to this neutral balance rate, we do see a correlation with a slight dip from Bitcoin from about 58 and a half, maybe 59,000, maybe trying to breach that 60K level and was rejected there, and would fall ultimately to about 55, give or take. Looking later on in the year, in December, we do see very wild and drastic exchange flow balance for USDT, particularly for stable coins. We see extreme negative rates. Stable coins are leaving exchanges in extreme amounts, and then we also see stable coins coming towards exchanges at an extreme rate as well. Lots of volatility observed here. And we also see that at the same time, this was during this extreme market volatility to the downside. Bitcoin had just fallen from about 55K to a low of about 42 to 44K in the span of maybe a couple hours. And this is one of those instances of extreme volatility that Bitcoin is notorious for. Now, we do see volatility in the stablecoin exchange flow rate. People are moving money all around. They're trying to either catch those bottoms, or they're trying to short or long. Lots of leverage was used. A lot of money was lost as well in terms of liquidations. If you're not sure about derivatives or longing or shorting, please make sure you check out our section on that. We're not going to go into too much detail on how that process works. If you're interested in more information, check that out. In our example, we're mainly focusing on exchange flow rates and how this is a sign of impending price volatility. If stablecoin exchange rates or money is being transferred back and forth across from exchange to private wallet, there's a reason people are buying and selling and overall taking out loans, either to bet that the market is going to go down lower, or bet that the market is going to go up higher, or to pay back their loans. Let's say if there was a bunch of people longing at this particular point, they were placing bets that Bitcoin would recover and return back to these all-time highs, and then the market dumps. The market falls down from 55K to 44K. Well, as a result, all of these people that placed those bets that Bitcoin was going to go back up, they have to repay back those loans. They have to repay back those debts. And the stablecoin exchange flow rate is a reflection of that. We do see the same as well with Ethereum. What's interesting here is correlating with the exchange flow rate seen in Bitcoin at the same time periods, particularly December 4th and January 4th as well. These extreme wicks to the downside and to the upside. These are indications of market volatility, and really the price is a reflection of that as well. These extreme losses over the course of December, from a high of about 4,600 per Ethereum all the way to a low of about 3,100, and really bottoming out at about 2,200 in early in mid-February and mid-January. This was really a sign of volatility to come, stable coins being exchanged back and forth, and really watching the exchange flow balance of USDT and where stable coins are being sent to and who's collecting them, how it's done, can be a sign of future market volatility to come.